9.6, 9.6 you get. Can't beat 9.6. 9.6 is amazing.
Welcome to DOW'S Stock Talk. In this particular video, this will be a Dave Ramsey reaction video. The name of this video is, are IBONDS a good investment right now? No further ado, let's jump into it. But make sure you hit that like button, by the way. That was an awkward intro, but let's carry on.
So, Christina, there is quite a little stir going on.
Oh, let me make sure I don't have it on the, because sometimes it end up lagging. So when I'll reduce the quality, so hopefully we'll see less buffering. Dave is actually on this show. The last couple of ones he wasn't on, but he's on this one.
Even among the Ramsey Baby Steppers community.
Baby Steppers. Community. Let me find out he's a comedian.
About these IBONDs, we've got a couple of days if you want to put money into an IBOND and get 9.62% annual interest for Series I bonds. And so because the rate has gotten so high, it's gotten everybody's attention.
By the way, I did a video on that, on IBONDS. Just check the suggested videos. Just want to throw that out there, but continue, Dave.
Not everybody's attention, but people are buzzing about it. And so people are saying, Dave, what should we do? What should we do? What should we do? Well, let me tell you that how much money I have in IBONDS and how much money I will be putting in IBONDS. Precisely zero.
Dave, are you serious? The max you can contribute to an IBOND is $10,000. $10,000 to you is like a penny. So of course, for you, like, it wouldn't be beneficial, but let's carry on. Dave, you know you balling. Let's carry on though.
Why is that? Well, 9.62 is the annualized interest rate for the first 6 months. After 6 months, it will drop to whatever the prevailing rate is at that,
which will probably be at least 6.48%, but carry on.
Time, and that has traditionally been down closer to 5%. Most people are thinking it's going to be about 6.5% beginning in November.
Yeah, it will be.
So you're pretty sure it's going to drop at least to that after 6 months. And if you do not leave your iBond alone 5 years to cash it out early, you get charged 3 months of the interest.
Well, at least he's spitting facts. Everything he's saying is absolutely true about the iBond.
That would be 1/4 of the interest. And so if you average 6.5 and 9.5, you would get 8 3/4, something like that, or 8.5 roughly, and 7 and some change anyway. And then take 1/4 of that away. That's what you're going to be making, and even less because it's going to adjust down further later. So the problem is this: it's giving you decent. It's giving you way above average short-term interest rates, but it's not really a short-term interest product. It punishes you if you don't leave it alone long-term, and it's a...
I get what he's saying. He's making some valid points, I must say.
Lousy long-term product because...
It's definitely lousy long-term. For iBonds, it's just to help maintain buying power, so, I mean, especially if you want no risk, but I get what you're saying. He's right. His points are right. I agree.
I can make a lot more than 9.62 on average investing in good mutual funds. Stock market is average north of 11%. I've been investing in mutual funds for 40 years, and
Let's go back. I think he brought some interesting points that I wanted to comment on, but let's go back.
Product, because I can make a lot more than 9.62 on average investing in good mutual funds. Stock market is average north of 11%. I've been investing in mutual funds for 40 years, and I've averaged way north of 12% on my mutual funds over that number of years. Way better than 9.6. Oh, wait, it's not really 9.6. It's only 9.6 for 6 months. Oh, wait, you can't get it out earlier than 5 years unless you get 1/4 of the 3 months of interest is a penalty. And so people don't read the small, all they do is read the big, and the big print says, woo, 9.6, 9.6 you get, can't beat 9.6!
Dave antics can't beat 9.6! Hold up, I was not ready for that. At first it was a little dry, but let me find out Dave got more antics than me.
Read the small.
Matter of fact, let me know in the comments below who got more antics, me or Dave. Team Dave or Team Dow? Let me know in the comments.
All they do is read the big, and the big print says, "Woo, 9.6, 9.6. You can't beat 9.6. 9.6 is amazing."
Oh, Dave got me laughing on this one. Let's play it back one more time. Let's play it back one more time.
People don't read the small. All they do is read the big, and the big print says, "Woo, 9.6, 9.6. You can't beat 9.6. 9.6 is amazing. It's amazing." And yeah, it is amazing. That's a great interest rate on a short. If I could get 9.6 on a 6-month CD, I would take it.
Absolutely.
And I talk about moving some of my emergency fund there maybe, but that's not the terms on this. The terms are 5 years, or you have a 3-month penalty. The terms are it's not 9.6 for a year, it's 9.6 for 6 months on a 1-year bond. And you know what the last 6 months are? No, you don't, because they don't tell you until later.
Well, see, this is the thing. They do use a specific formula. So within the last month, you have a very high, like probably want to say 90% probability if you know what the numbers are. So as of now in November, it will probably be at least 648. Now it's 962. So if you would have bought it before 12 o'clock tonight, you would have known you would have got a 9.62 and 6.48, which even after the penalty would give you around an average return of about 6.51%. So if you're telling me here's investment zero, for instance, from the federal government, can probably it's the safest you can get, 6.5% guarantee if you hold it for at least a year. To me, I mean, if I need any time the money within a year or so, probably if I need the money, within a year or so, I mean, I don't see anything wrong, especially if I was older and I didn't want to take any risks, because like you got to think about it. In the market this year, even though, yes, stocks long term has a much higher return, in the short term, could be a lot of volatility. And you have to remember, if you read the psychology of money, certain types of people, they don't want to have to take on that risk. So if you was telling me, okay, a 6%, because right now if you would have had the S&P this year, you'd be down 20%. If you would have had the I-bond, I mean, of course you don't use I-bonds to build wealth, but if someone's just trying to maintain their buying power, and they probably might need the money, maybe 15 months, 16 months, 18 months, or maybe they're close to 70 and they're just like, they don't really need any risk at all. They're just trying to maintain it or lose less buying power. I mean, I think it's a good alternative. But if you're younger and you're looking at it from a long-term perspective, if you got a couple years or so, then of course no. But I mean, if you need the money within a little over a year or so, I mean, I don't see anything wrong with it for a short play. Of course, long term, from a long term perspective, dabbling into it longer than a year, I definitely would agree you're setting yourself up for a guaranteed loss. But that's enough of this. Let's continue.
It could be anything. And I-bonds have traditionally hovered down in the 5 and sub-5 range.
But I will say, after this, that 6.48 going forward, I don't think it'll be no longer worth it. I definitely think there's definitely better alternatives now, especially since interest rates are increasing. You see the high yield savings is climbing up there, CDs is climbing up there. So soon, I think going forward, those rates will probably be higher than the I-bond rates. But let's carry on.
Throughout their history, this is an anomaly that has jumped up, and so
well, I think you
just can't lock it in, and so it's a myth.
Right, and it's getting a bunch of hype in the news, and the headlines are saying that 9.6%, and then at the very bottom of the article it says, in like a small paragraph, the downsides, and it explains that change in the lock. And
yeah.
But that is true as far as there's a lot of stipulations. It's not like, oh, you're just going to get 9.62% in 6 months. First of all, it's annualized, like they said. First of all, if you don't want a penalty, you have to hold it for at least 5 years. Most of the time when I particularly use, I would never hold it over a particular year. So like I said, and also to kind of know the second numbers early on, if you follow the CPI numbers, you can have a good indication. But I mean, to me, this is the only time. It's a very, very rare circumstances where I think an IBOND's worth it. So I think right now, if you can get it before, well, after 12 o'clock at night, they probably won't process it if you look on the site. But yeah. Right now, any other time other than probably this unique situation, I would probably say it's a waste. I mean, not unless you're super paranoid about losing any type of money or something like that, and you're just trying to maintain what you have, or help just keep barely up with inflation. Probably actually be lower than that, probably so. But other than that, and if it wasn't for this rare situation, I would never recommend that. I'm not a financial advisor, but I think I'm rambling too much. Continue.
All of that. So it's important to not just get lost in the hype, but
Well,
realize
this
the fine print.
CNBC article we have laying in front of us, for instance, says your last chance to secure 9.62% annual interest rate for Series I bonds is October 28th. Wait
Yep, that's definitely true. 12 o'clock.
a minute. Not true. It's not annual. It's calculated as annual, but only for 6 months. 6 months is not annual. So, I mean, right off the bat, we've misled with the headline. But
Banks do that all the time. I feel you, Dave. I feel you, Dave. But banks do that all the time. On the CDs, they do the same thing.
And so, but it gives you something to write about. It's clickbait. It
Right.
causes people to jump on your little site and read your little stuff. So,
As a YouTuber, them clickbaits do be getting. You have to have clickbait titles, or people won't watch it. It's the sad truth.
you're not stupid if you do this, but you're stupid if you do this thinking you're going to get 9.6% for more than 6 months.
Let's not call people stupid, Dave. Respectfully.
Minus 3 months if you cash it out early. So if you're using this for emergency fund, you cash it out early, you're going to negate most of what's there. So I don't screw around with this stuff.
Yeah, I mean, for me, like emergency fund, or someone like super older and they don't like taking any risk at all, and if it was just going to sit in cash, I mean, I think it's just going to sit in cash and do nothing for a year. If you're just going to have it sit there and do nothing, I definitely think this is much better than that. But I get Dave's point. Overall, I would agree with what he's saying.
It's a variable interest rate product with long-term implications and heavy fees for cashing out early. So it's not a good short-term product, and it doesn't make...
It depends on the person's situation. But let's carry on.
make enough to be a long-term product. So
I definitely think long-term is trash. It's garbage long-term.
I don't have any money in it. That's why I don't have any money in it. I'm not trashing it.
Dave, it's a $10,000 or max. You're a millionaire. $10,000 is trash to you, Dave. Of course, $10,000 is the max you can put in, Dave. What's $10,000 going to do for you, Dave? Come on now. Let's carry on.
It just, guys, you just got to learn to look at these things a little more carefully. And once you realize all the gotchas, then you go, well, it's just not as sexy as it sounds.
That is very true. There's a lot of particular rules that you need to know about this particular IBOND. By the way, I think you have to lock it in, purchase it by at least October 28th. The site is actually down. I was trying to pick up some for my uncle. I'm going to try again, but it looks like I might not be able to do it. I'm going to keep trying before the night's up. But that concludes the video. Let me know in the comments below, what do you think about the IBOND? I think he made a lot of great points. I don't agree with him 100%, but I do agree with a lot of the points he was saying. Make sure you hit the like button. If you can, make sure you subscribe to the channel. No!